I don't know if you've been paying attention to recently PureCycle, but the stock of PureCycle reached $2.40 in January, and now it's almost a 4x. So from the bottom, 267% up, and PureCycle is a company that is involved in plastic recycling, and as of now has a market cap in US dollars 1.5 billion. Okay, about 250 million of debt, no revenues, zero revenues, 250 million of debt, and burns $200 million per year. $200 million per year. 1.5 billion market cap. There was a lot of shorts. And the stock was shorted a lot, and now it's almost a 4x from the bottom. Now, I'm not talking about it because I think it's overvalued or this or that. I'm talking about it because I want to put things in perspective because of Aduro. And as you know, Aduro is going to uplist in the United States. And I see a bunch of comments, people talking about, Aduro is trading at such a metric to revenues or such a metric to this or that. And I'm just like, are you people this clueless? Like, honestly, this clueless? So I want to talk about PureCycle because this is a comparable. This is a comparable for us to what Aduro can trade when it trades in the US. Because look, PureCycle trades on NASDAQ, okay? And again, it has a market cap of 1.5 billion. No revenues. No, actually, the facility that they have is a failed facility. It's not working yet. Okay, I'm not saying it won't be working. It's not working now. They don't generate any revenues. Okay, so clearly revenues are not important to valuing companies like this. They're not. I mean, this is a fact. This is not an opinion. So if revenues are not important, what are they trading on? Well, clearly future, right? Now, whether the future of PureCycle will come to fruition or not, that's not the topic that I'm discussing here. I'm saying is that it's trading because the market is forward-looking. So if you look at a company like PureCycle, it has a market cap of 1.5 billion because of the problem that this technology can potentially solve. That's it. Okay? That's what it's trading for. It's not because it has a certain revenue profile. The problem is so big that a solution provider can make so much money that a company like PureCycle is valued accordingly. Okay? But now, how does PureCycle compare to Aduro? Because Aduro has a market cap of 157 Canadian, right? 157, what it is in US dollars, it's about 110 US dollars. PureCycle has a 15 times, almost 20 times, when you add the debt, it's like 20 times market cap. Do you think PureCycle would have this valuation if it traded on Canadian Stock Exchange like Aduro? Do you think so? Not a chance. Not a chance. And now, how do the two companies compare? Well, PureCycle is not even 10% of Aduro. Like Aduro, PureCycle addresses a tiny portion of a plastic market. Tiny portion, specific type of plastic. Cannot take any contamination. The best plastic that there is, they have to use it as input. So part of a plastic. What does Aduro address? all sorts of plastic. It also has renewable oils. It also has the new vertical, right? BTX chemicals. It also has bitumen. So four verticals. And PureCycle is part of one vertical, tiny part. And PureCycle has a market cap that's 20 times the size of Aduro. And Aduro owns its own IP. PureCycle doesn't even own its own IP. They only have one facility. And they could, of course, in the future have more facilities if they prove that this one works, right? But right now they have one that's not generating revenues and it's not really doing that well, okay? But again, I'm not making this video to say that PureCycle is overvalued or undervalued. I don't care. I'm not buying the shares. All I'm saying is I'm trying to show you the disparity and the inefficiencies between the markets where you have a company that is better and then the worst one is trading 20 times higher because of the exchange that it's on, right? So if we think about if Aduro were to have a market cap of 1.5 billion, okay? Well, really you have to include debt, 250 million of debt, because the entire enterprise is trading for about 1.7 billion, including the debt. If Aduro had that kind of valuation on about 30 million shares, it would have to have a stock price of $58 US. And in Canadian, it would have to have an $80 stock price. This price would have to be $80, 80, to trade on par with PureCycle. Now, Aduro is way better than PureCycle. Way better. Four verticals that its technology addresses. So it's not even better by a multiple of 4 because PureCycle addresses only part of one vertical, okay? But if we just say it's 4 times better, Aduro would have to probably trade at $300, $350 per share just to be on par with PureCycle, right? So when I hear like, oh, it needs to reach a certain revenue level for Aduro to get that kind of valuation. Well, look at PureCycle. It doesn't generate any revenues, and it has this kind of valuation. And also, how many shares are there? Well, PureCycle has about 160-something million shares out there. And so in the float, probably has like 140 million shares in the float. You know what Aduro will have when it goes to trade on the US exchange? 15, like 1.5. It will have 10% of the float that PureCycle has. So, like when I see these comments, people on Aduro, on the message boards, you have no idea what you have. You have no idea what you have, okay? And when we start trading in the US, like, I wouldn't be surprised if they get a billion dollar valuation, $1.5 billion valuation. US, I wouldn't be surprised because clearly revenues are not important to reach that kind of valuation. We have a comparable that has no revenues and is trading for that, and it's not even close to the technology that Aduro has. It's not even close. It's not even in the same league. Put this in your head. Put this in your perspective. That's what's important.